All right, let's talk about the 2021 home affordability myth. So don't get me wrong, home prices historically are becoming more and more unaffordable. However, something interesting happened from 2020 to 2021, where actually homes have become more affordable in 2021 because of interest rates, even though home prices have increased. And we'll talk about this. We'll actually run through some real life numbers on an example purchase price here in just a second. But one of the big problems that we're facing right now is that we're using the wrong metric. Most people are talking about median home price. Okay, so we can see an example of median home price here. It just means half of the home prices sold are above this, half are below it. Okay, and so what ends up happening, why we're using this wrong metric is median home price doesn't tell us really anything about home affordability, nor does it tell us anything about the home value or the home price when it sells. All it's doing is telling us about what homes are being sold. And so what's ending up happening is the median home price actually rose about 15% year over year in 2020. But it doesn't mean the home price actually increased by 15%. All this is showing us is that there's so much less inventory on the lower end of the spectrum, a lot less homes being sold on the lower end, and that pushes that median higher. So it doesn't actually mean that the value of the home changed. It's just showing us the spread, that there are more homes being sold on the higher end than there are on the lower end, right? Because if we remove some stuff on the lower end, because there's less inventory, less homes being sold at that price range, all of a sudden the median increases to those higher price points. Okay, so if we actually look at real appreciation, it's actually closer to 7%. Now it's still sizable, right? 7% appreciation, especially when we compare that to weekly earnings growth. Last year, weekly earnings growth, so the earning growth for income was 5.9% year over year, even amidst the pandemic. So we could still say, yeah, but appreciation is still so much higher than income growth, right? Appreciation grew at 7%, but incomes grew at 5.9%. So there's still a disparity here, right? Home prices are increasing faster than income. And while that's true, it's not necessarily indicative of what's actually happening with affordability, right? Because only a portion of our income is being spent on a home price. They don't have to grow at the same number. So if we ran through an example here, if we purchased a home in 2019, and let's say our mortgage payment was $1,000 a month, principal and interest, we're gonna leave out taxes and homeowner's insurance because those are gonna vary based on where you're at, but principal and interest, $1,000 a month. For us to qualify for that, roughly, we need about $5,000 per month gross. Okay, and these are based on averages from Fannie Mae. So if we purchased that home a year later, so let's say maybe we didn't purchase this home and we looked at it a year later to see what it would look like. Let's say there was 5% appreciation in that time, so the home price increased 5%. Well, the new monthly payment would be $1,050 per month. That's a 5% increase in price, raises our payment 5%. So how much income change do we need to cover that additional $50? Well, we need to go up to $5,050 a month, which is actually only 1% change in our income. So we can see that even though the price increased by 5%, our income only has to increase by 1% to accommodate that change. To now qualify for a 5% increase in price, we only have to qualify with 1% increase in income. So they don't have to track exactly the same. One can grow faster than the other one. And if we look at this kind of even more in depth, let's say we bought a home in 2020, okay? And we factored in 7% home appreciation, right? Not the median price of 15% growth, but the home appreciation growth, the true actual growth here in the home. In 2019, that home would cost us $327,100. So just in the period of a year, that home price increased by almost $23,000, $22,900 in 1 year. So we could say homes have become more expensive. While that's true, we have to also look at what's happening with interest rates. So 30-year fixed rate in 2019 would be around 3.75%. In 2020, would be closer to 2.75%, which is a decrease of 1% on our interest rate, okay? So we also look at our loan amount. Let's say we did 10% down. 2019, we would have borrowed $294,000. 2020, we would have borrowed $315,000. So right off the bat, we have to borrow $20,600 more just over a period of 1 year. So again, we can say home prices have become even less affordable for us. But everything kind of breaks down a little bit when we start actually looking at the monthly cost of what this looks like. So in 2019, that home would have cost us $1,363 per month. In 2020, it would have cost us $1,286, actually a $77 per month savings. So here's when we can start to see, well, home prices have increased. The affordability has actually lowered because of how much that impact in 1% lowering on interest rate has actually lowered our monthly payment. Now, something we have to be fair about is mortgage insurance, right? We took out an additional $20,600 in our loan balance. So our mortgage insurance is going to go up because we're not putting 20% down. So 2019, this would have been somewhere around $113. 2020, closer to $121. So that's a cost of $8 for us. If we add this together, total payment, principal and interest, plus mortgage insurance, again, we're leaving out taxes and homeowners insurance because those are going to vary by state and aren't going to impact this kind of calculation. So 2019, this would have been $1,476. 2020 turns to $1,407. It's actually a $69 per month savings. So this is where it kind of breaks down a little bit. If we just look at that front number, if we say median home prices are increasing, home prices are now, $23,000 more expensive. It doesn't mean they're less affordable, because now what's changed is the monthly cost is actually cheaper than it was last year. There was an increase of $23,000 in price, but a lowering of almost $70 per month in monthly difference. Now, here's where home affordability really starts to kick in, is it's not necessarily the monthly cost that becomes the issue. A lot of people think it's the monthly cost. The down payment is the big thing that starts to add a little bit of a crippling factor to qualifying for a home. So in 2019, a 10% down payment would have cost us $32,710. 2020, well, the home price increased, and now that down payment of 10% is $35,000. So now that's $2,290. So if you were in 2019 and you said, I'm not going to purchase a home, it's too unaffordable for me, okay, which is fair, maybe it was for you at that point, just waiting a year, you would have had to have another almost $2,300 in your savings to go towards your down payment for that same scenario. So the monthly cost decreased, but the down payment cost increased. And this is where sometimes the cost of us waiting to purchase a home can actually be a little bit of a downside for us, okay? Now, if we also look at income, we had that 5.9% increase year over year. Our $5,000 per month income changed to $5,295. We gained $295 per month in income. All right, so we can see that even though median home prices increased 15%, actual appreciation was closer to 7%. Okay, that's still 7% growth, right? $23,000 more expensive for this home price, and you're seeing home prices increase, and you're thinking there's no way I can afford it. When in reality, you can afford the monthly payment. The monthly payment actually decreased. Your income most likely went up statistically on a national average, and the home monthly price decreased by a little bit. So the monthly affordability is not the issue. It's primarily the down payment that becomes a little bit more of the issue. And the longer that we wait to purchase a home, the more we put that off, the bigger that down payment expense can become as that home continues to appreciate in value. So the main goal of this, of you understanding this, is really to see how interest rates are actually impacting this decision and kind of dispelling the myth around home affordability. Because over a historic period, yes, homes have become more and more unaffordable. But because we've seen this huge shift in interest rates from 2020 to 2021, and actually, pretty much all of 2020 had a lot lower interest rates, we can see that homes are becoming more affordable monthly. And the longer that we wait, the more it can actually cost for us to purchase a home with that upfront cost. Now, with that, there's the caveat of me saying, I get no benefit from you purchasing a home right now or by waiting. That's completely up to you. And I don't want you to take this as a way of me saying you need to go buy a home now. Homes are affordable. Go buy a home. Interest rates are low. That's not what I'm saying, okay? There's zero pressure here. This is only to illustrate what happens with interest rates, how this affects your affordability, and how we need to look at the totality of everything. We have to look at all of these numbers together. It's not fair just to look at the median home price and to throw in the towel and say it's over, because that's not true. We have to look at the whole thing here. And when you start asking the question of is now the right time to buy, we have to go back to conversations like this. Is now the right time to buy is more of a question about what's happening with us internally than what's happening externally in the market. Because it's almost always going to be the right time to buy if everything financially in your life is solid. If you have high interest debt paid off, if you have money saved up for closing costs, down payment, any reserve cash that you want as an emergency fund. If you have those financial things set up, things like a budget, then you can buy in almost any market and still come out on top as long as you're comfortable with understanding how these numbers are working in your favor and things that you need to watch out for. So again, don't hear me say this is now you have to go purchase a home, because that's not what's happening here at all. This is just an illustration of what's going on with interest rates and how this has impacted the monthly payment and what affordability can look like from 2020 to 2021, what it's looked like over the past, short term, 2 to 3 years. Historical average, yeah, home prices have become a little bit more unaffordable, but I've seen so many people who are afraid to even enter into the conversation about purchasing a home because they just see this increase in purchase price. All right, and I don't want you to miss out on whatever home ownership looks like for you just because you're seeing that one number. Because again, we need to look at the whole thing, everything that's going on. If we just focus on one number, that's when we become short-sighted. We miss out on the whole picture, the whole scope of what's going on. And that's normally where we end up making bad decisions, when we base everything off of one piece that drives the rest of our judgment. We need to look at the whole picture.